Bitcoin recently pulled back to the $70,000 level after reaching a high of $73,000 over the past few days. While some may worry, this retracement is actually quite normal and healthy for Bitcoin's long-term upward trajectory. In fact, this slight dip gives the asset a chance to build new support, strengthening its potential for future growth. If you look at Bitcoin's recent price movements, you'll notice it had been climbing steadily without much pause. There was no consolidation period to establish a strong support zone on its way up. However, now we're seeing a pullback to the previous resistance levels, which is now turning into support. This shift, known as a change of roles, is common in technical analysis, where a former resistance level starts to function as support after it's broken. From my perspective, this consolidation around $70,000, or possibly down to $69,000, is ideal. It offers a unique opportunity to accumulate more Bitcoin before the next leg up. A stable support level at this range could set the stage for a more sustainable price increase. Here's how I plan to navigate the current market situation. If Bitcoin consolidates at $69,000 or even drops to around $67,000, I'll take this as an opportunity to add to my position. In my view, Bitcoin is still reasonably priced at these levels. Many experts are forecasting a long-term target of $100,000, given that the true Bitcoin pump hasn't even begun. With that in mind, adding more during consolidation could set us up well for the next rally. Now, if you're a conservative trader or if this level of risk isn't for you, it's wise to set a stop-loss order around $65,000. This approach allows you to protect your investment in case our bullish expectations don't materialize. Markets are always unpredictable, and this stop-loss strategy can help minimize potential losses if Bitcoin decides to move against our trading bias. Looking at the weekly time frame, Bitcoin's technical indicators show promising signs of a continued upward trend. For instance, we're seeing green bars on the moving average convergence divergence (MACD) indicator, which means the positive momentum is building. This positive histogram often indicates a potential move to the upside, similar to previous bull runs. Another promising sign comes from the Relative Strength Index, RSI. Currently, the RSI is not yet in the overbought zone, which means there's still plenty of room for growth before we hit overbought territory. This gives Bitcoin a lot of potential to continue its upward movement without hitting a technical ceiling. To sum up, while a pullback might feel like a setback, it's an essential part of a healthy market cycle. Bitcoin pulling back to $70,000 allows for new support levels to form, which strengthens its overall price structure and makes it more likely to continue rising in the long term. Whether you're a long-term holder or a trader, it's important to understand these technical setups and plan accordingly. Use this time to assess your strategy, whether that means adding to your position, setting stop-loss orders, or simply holding and watching the market unfold. Thank you for tuning in. Remember to stay updated on the latest market moves and adjust your strategy as necessary. I'll see you in our next video.